The tech world just moves so fast, doesn't it? Like you hear buzz about a company and then boom, they're all over the news. Right now, it really feels like Palantir.
Oh, absolutely. There's been a ton of noise around Palantir, especially this May. And a lot of it's focused on the stock, where it's going.
Right. So for this deep dive, we've got some interesting angles. We've looked at Motley Fool articles digging into the stock's recent climb and what might happen next.
Yeah, and there's that potential Trump-Saudi Arabia deal angle, too, which adds another layer.
Exactly. Plus, we're tackling that huge question. Could Palantir actually hit $1 trillion market cap by 2030? And we saw a YouTube analysis, pretty bullish, calling them a key AI winner.
It's definitely a mix. You've got real optimism clashing with some, let's say, more cautious views.
So our mission today is really to cut through that noise, get to the core drivers behind what's happening with Palantir, and give you a clearer picture of what analysts are actually saying.
Sounds good. Where should we start? The stock performance.
Let's do that. Yeah. I mean, the stock has been soaring, hit all-time highs in May 2025. We noted $130.12 on May 14th.
Yeah.
What's really fueling that climb?
Well, the big thing is that their revenue growth seems to be speeding up.
Okay.
Q1 2025 saw 39% year-over-year growth.
Okay.
Which is actually up from the 36% they posted in Q4 2024. So it's not just growing, it's accelerating.
And that acceleration, it's pretty much down to the AI revolution, right?
Yeah.
Governments, commercial clients, they're all spending more.
That's the main story, yes. Their early focus on AI is really bearing fruit now. You see it especially in their U.S. commercial revenue.
How so?
That segment grew 71% year over year. 71%, that's a huge jump and shows businesses are really buying in.
Why?
And they're closing big deals, too. The last quarter, they reported closing 31 deals worth $10 million or more each.
31 $10 million deals. That's significant scale.
Exactly. It shows large organizations are seeing real value.
Okay, strong performance then. Let's look at the bulls. Their YouTube analysts calling Palantir a real AI winner. What's the thinking there?
Yeah. It really comes down to Palantir being early and heavily invested in AI. This analyst thinks Palantir is involved in, the vast majority, maybe 75–80% of the big enterprise AI deals happening now.
Really? That many?
That's the claim, with contracts typically in the $3 to $5 million range initially, but many potentially hitting 8 figures over, say, 2 or 3 years. They see Palantir's tech as crucial for real-time monitoring and AI-driven decisions.
And it's not just government work driving this anymore. Clearly, the commercial side is a big part of the story now.
Absolutely. Industries like insurance, retail, transportation, logistics, they're all adopting Palantir's platform. It's good at breaking down data silos,
Makes sense.
And their algorithms provide unique insights. One report mentioned they hit 554 enterprise customers recently. That's up 42% year over year. So commercial adoption is definitely a key driver.
Okay. But whenever a stock runs up this fast, you have to talk valuation. The Motley Fool pieces called it an extreme premium, pointing to a price-to-sales ratio of 94. What does PS94 actually mean?
It means the market values the company at 94 times its yearly sales, which is high, very high for enterprise software. It signals massive expectations for future growth.
Extremely high expectations.
Right. The bear argument is that maybe those expectations are too high.
So even if Palantir keeps growing fast, like that 39% rate.
Exactly. Even if they maintain 39% growth for 5 years and get profit margins like Adobe, which are excellent, around 36%, their future PE ratio, price to earnings, might still be around 60. And a PE of 60, historically, isn't considered cheap.
Right. So they don't just need to keep growing fast. They might need to grow even faster as they get bigger, just to justify today's price. Some are calling it wildly overvalued.
That's the essence of the risk argument. That PS of 94 is seen by some as dangerous territory.
And what about that $1 trillion market cap by 2030? Seems ambitious.
Very ambitious. Skeptics point out that even if you model, say, 50% average annual revenue growth, which is huge, and maybe 40% operating margins.
Those are also very strong assumptions.
Very strong. Even then, the earnings multiple needed to reach $1 trillion looks incredibly high. Plus, look at the current PE ratio over 500. That's another sign the valuation might be stretched, The math looks tough.
Okay, let's switch gears slightly. That potential Trump-Saudi Arabia deal. How does Palantir fit into that? It seemed to give the stock a lift.
Yeah, it did. So reports suggested a possible deal giving Saudi Arabia more access to U.S. AI chips. Now, importantly, it's about the chips themselves, not Palantir directly. But the market reads it as a signal that maybe a Trump administration would be more open to letting Middle Eastern nations access sensitive tech and related services.
Services. And Palantir, with all their security and data management expertise,
Yeah,
they'd be right there.
precisely. That's the thinking. And Palantir CEO Alex Karp being seen in Saudi Arabia with other tech leaders just fuels that speculation.
Makes sense.
Plus, any deal like this would almost certainly need strong security provisions, controlling access, monitoring data centers. That's Palantir's bread and butter. So while they're not in the chip deal, they could be a major beneficiary if that door opens wider.
So let's try and pull this together. On one hand, you've got really strong momentum, rapid AI-driven growth, huge gains in the U.S. commercial space,
Yeah.
and maybe new geopolitical opportunities opening up.
Yep, that's the bullish case in a nutshell. Real potential there.
But on the other hand, you have these serious valuation concerns. The metrics, PS, PE, they look sky high, suggesting the market is pricing in perfection, maybe even more than perfection, for years to come.
Exactly, and that's the core tension. Analysts are split. Some see the tech, the AI position, and they're all in. Others look at the stock price and say, whoa, hold on.
So for you, the listener, the takeaway is this. Palantir's got a powerful growth story, no doubt, especially with AI. That comes wrapped in a very, very high valuation.
Which means significant risk. You have to balance that exciting potential against the chance the stock would pull back sharply if growth doesn't meet these incredibly high expectations.
It really forces you to think about your own risk tolerance, doesn't it? How much are you willing to bet on sustained, exceptional performance?
Absolutely.
So wrapping up our deep dive on Palantir in May 2025, we've seen the impressive AI-fueled growth, touched on potential geopolitical tailwinds, but also spent time on that intense valuation debate.
Those are definitely the key pieces to watch going forward.
Which leaves us with a final thought for you to chew on. Thinking about the next 12, 18 months, what would actually be the bigger surprise for Palantir? Would be seeing the company continue this exponential growth and actually justify this valuation? Or would it be seeing a major correction, bringing the stocks back down to more conventional levels? Something to really ponder. Okay, let's unpack this. A massive wave of AI news just hit the tech world, mostly out of Google's annual I/O conference. It felt less like small updates and more like Google just, turn on the fire hose for AI across everything they're building.
Yeah, it really did. And at the same time, you've got all this interesting discussion and movement around Palantir.
Exactly. Another company super focused on AI, but in a pretty different part of the market.
That's right. You've got the giant Google pushing AI into, well, billions of products, billions of hands.
Right. It's a fascinating moment, isn't it?
Right.
Seeing how these sort of different approaches might interact.
Absolutely crucial.
So today we're doing a deep dive into exactly that, this intersection. We're going to pull out the key insights from the news reports covering Google I/O 2025 and also the financial analysis looking at Palantir's recent moves and, yeah, that head-turning stock performance too.
And our mission here is pretty simple, really. Just cut through all the noise, the announcements, the numbers, and try to understand what this Google AI explosion might mean for a specialized player like Palantir. And maybe more importantly, why this whole story matters for you, for anyone tracking where AI is actually, going.
Because it really does show us, whether it's AI changing Google search or powering Palantir's platforms, just how fast this whole AI landscape is shifting.
Definitely.
So at Google I/O, the big theme they kept hitting was theory becomes reality.
Right.
They were showing AI moving out of the labs and directly into the products people use every day.
And the scale was just staggering. One of the biggest things was search, Google search itself.
Transforming it.
It's moving away from just keywords, isn't it, towards this conversational AI mode.
Totally. The sources talked about handling complex multi-step questions, analyzing images, even videos, pulling in real-time info.
It's a huge leap. And that deep search concept, generating expert-level reports by analyzing hundreds of queries.
Yeah, and integrating Project Mariner for practical stuff, like finding specific event tickets right now, or, and this is interesting, with permission, looking at your Gmail to suggest, say, events near your hotel.
Wow, okay.
Pichai called it a new era for search. Clearly feeling the heat from competitors like ChatGPT and Perplexity.
For sure. And it wasn't just search, was it? Gemini, their AI model, is just popping up everywhere.
Everywhere. Gemini Live, the screen sharing, camera sharing thing for live analysis, now free. for everyone, including iPhone users.
Free and on iPhone. Okay, that's big reach.
Huge.
Yeah.
And they rolled out new generative models, too, VO3 for video, which they said is the first to natively create sound effects and dialogue along with the video.
Yeah.
That's kind of wild.
That is a big step. Sound and dialogue natively.
And Imagen 4 for images, supposedly super detailed textures, 2K resolution, ready for printing and stuff, plus a tool called Flow for AI film creation just using language prompts.
Yeah.
And to get the top-tier versions, they launched new membership tiers. Google AI Pro for about $20 a month.
Okay.
And Google AI Ultra at a much steeper price, like $250 a month. More usage, early access.
What do you get for that, besides more access?
Well, things like AI translation in Google Meet, interactive quiz creation. Oh, and a nice touch, free AI Pro for university students in some countries, US, UK, Brazil, others, with more coming.
That's smart. Hook 'em early.
Yeah. And one last really intriguing bit from Google. They're getting back into smart glasses.
Oh, wow, really? After Google Glass?
Yeah, but this time framed as Android XR glasses powered by all these AI advancements, partnering with Samsung on hardware, Gentle Monster on design, Warby Parker, too.
Interesting mix. Different approach this time.
Seems like it. They showed off things like real-time language translation, Spanish to English, right there on the lens.
Live translation, okay.
Or finding and navigating to, say, a ramen place, using maps overlaid on your view. And they've really stressed comfort, aiming for something you could actually wear all day.
All day wear is the key, isn't it? That was the hurdle before. Okay, so that's the Google side, just this massive, broad AI push.
Right. So now let's pivot to Palantir. Their AI strategy is, well, it's fundamentally different.
Completely different focus. Palantir, their core is software platforms, Gotham for government, Foundry for enterprise, built to make sense of huge, messy data sets.
Exactly. And their AI place centers on their AI platform, AIP. They're not really trying to build the next foundational model like Gemini.
No, not at all. The focus is much more on data integration, analysis, automating decisions using AI. It's about domain-specific AI for sectors like defense, manufacturing, healthcare.
And crucially, they talk about being an orchestration layer.
Right, precisely. Think about it taking all these different AI models, maybe even Google's models eventually, and making them work securely with a company's super sensitive private data and existing workflows. That's incredibly hard.
Because the data's all over the place. Security is paramount.
Exactly. Data silos, security protocols, model compatibility. Palantir basically says, we provide the secure integrated plumbing so you can actually use various AIs on your critical data without breaking things or giving away secrets.
That makes a lot of sense. It's like being the AI conductor for complex enterprise needs. We've seen examples, right? Like their work with divergent technologies in manufacturing AI.
Additive manufacturing. Or with Archer Aviation for air traffic control, route planning, using Foundry and AIP, plus partnerships with folks like Databricks.
And this approach seems to be, well, working for them business-wise, at least recently. Strong Q1 results reported for 2025.
Yeah, revenue growth around 39%, and their U.S. commercial side grew, what, 55%? That's pretty significant.
Plus closing a lot of big deals like 139 over $1 million, 31 over $10 million in just the last quarter.
So they have momentum, which brings us back to the core question.
Right. Does this huge AI expansion from Google, all these powerful new tools hitting the market, does that hurt? Or could it actually help a specialized player like Palantir?
It's complicated. The analysis we looked at points both ways.
Okay, so the positives.
Well, on one hand, Google's massive investment validates the whole AI space, right? It educates businesses about what AI can do, potentially boosting demand for serious enterprise AI solutions, like Palantir's AIP.
And those more powerful models, Google's releasing Gemini, VO, Imagen. Couldn't Palantir just integrate those as new tools within their orchestration layer, offering clients more options?
That's exactly the argument. Palantir's strength is integration. More tools could mean more power for their platform. Plus, Google's focus on things like on-device AI, edge AI, that aligns with Palantir's sweet spot, working in sensitive or disconnected environments. Think defense, factory floors.
And the responsible AI angle.
Yeah, Google emphasizing responsible AI plays right into Palantir's narrative around data governance. Security things companies absolutely need if they're deploying AI seriously.
Okay, but there have to be potential downsides, right? Competition.
Absolutely. The big one is Google's expanding toolkit, especially within Google Cloud AI, might tempt some companies to just build solutions themselves using Google's stuff.
Or just rely directly on Google Cloud, maybe cutting out the need for a third-party platform like Palantir?
Potentially, yeah. And just the sheer availability of powerful AI tech could eventually put price pressure on everyone in the market.
Okay, let's quickly touch on the stock and that valuation,
Mm.
because this is where market perception of Palantir's AI future gets really intense.
It really does. The stock hit all-time highs, but then dipped recently. Broader market stuff played a role too, of course.
But those valuation numbers analysts keep pointing to,
Yeah.
they are pretty staggering.
Yeah, the sources mention as of late May, a price-to-sales ratio over 100 and a price-to-earnings ratio near 560.
Which is, I mean, layman's terms, investors paying over 100 times sales, nearly 560 times earnings per share.
Exactly. Words like astronomical or wildly out of proportion get thrown around in the analysis. The suggestion is the market has already baked in absolutely massive AI growth expectations.
And the criticisms often include reliance on government contracts still, and the impact of stock-based compensation on reported earnings.
Those are common points, yeah. It's a high-stakes bet on future execution.
So zooming out, why should you, our listener, care about this Google versus Palantir dynamic or these valuation debates?
Because it's not just about these two companies, right? It's like a real-time case study of how the AI landscape is shaking out.
Yeah.
It shows that even as the tech giants build these huge, all-encompassing AI ecosystems, there's still this argument for, and maybe a critical need for, specialized platforms. Players like Palantir who can handle the messy reality of integrating different AIs with sensitive, real-world data in tough environments.
It really highlights that tension, doesn't it? Between the incredible tech potential and how the market values that potential, and how quickly sentiment can shift.
Exactly. Understanding that dynamic just helps you stay informed, stay grounded, as this AI revolution keeps rolling.
It definitely leaves us with a big question to chew on. As AI gets woven deeper into everything by giants like Google, is the future of enterprise AI going to be dominated by their massive ecosystems?
Or will companies like Palantir, the expert orchestrators focusing on those complex data integration challenges, actually become more essential, finding their unique value proposition growing?
Yeah. It's a story that's definitely still being written.
Very much so. Welcome to the Deep Dive. Today, we're really digging into Palantir Technologies. PLTR, it's a company that seems to be everywhere, grabbing investors' attention with its data analytics and these AI platforms.
Absolutely. And for this deep dive, we've gathered some, well, pretty interesting recent material. We're looking at news summaries, financials, analyst takes, mostly from this past week, late May 2025. Some stuff from the Motley Fool, Wedbush in there too.
Right. And our goal here is to unpack what this latest info tells us, about their business momentum, that big push into AI, how the stock's reacting, and importantly, tackle those sometimes tricky questions around its valuation. We want to help you sort through the noise.
Yeah, it's a great time for it because, I mean, the sources just keep highlighting how Palantir stock has been on an absolute tear, leading indexes. But that brings up the sort of central tension we saw in the commentary. Is it now priced for, well, perfection?
Okay, let's start right there then. This impressive performance, the sources mentioned, a 1,200% rise over 3 years, and leading the NASDAQ 100 this year, up like 63% year-to-date recently. What's actually driving that, according to the reports?
Well, the sources point pretty directly to accelerating momentum in the business itself.
Yeah.
We saw figures showing Q1 2025 was the 7th straight quarter of revenue acceleration, hit $884 million total.
Just a quarter, okay.
Yeah. And what really jumps out is the U.S. market strength. U.S. revenue overall, up 55%. The government side, U.S. government, up 45%. That's about $373 million.
Solid number.
But the U.S. commercial segment, I mean, the sources literally described it as being on fire. It was up 71% to $255 million.
On fire. Yeah, that definitely catches your eye. And I saw something about booked total contract value. In U.S. commercial, up 183% in Q1. That seems huge, right? Like future growth locked in.
Oh, absolutely. That's a really strong indicator of the pipeline converting, demand turning into actual deals. And building on that, the company boosted its full year 2025 revenue guidance.
Okay.
They bumped it up to $3.89 billion to $3.9 billion,
Right.
which implies, what, about 36% annual growth? And they specifically said they expect U.S. commercial growth to stay way up there, around 68%.
Wow.
So you've got accelerating revenue. Profits are soaring too. Operating income more than doubled. Non-GAAP net income up 62% in Q1, plus strong guidance. The sources are clear. That's what's fueling the excitement.
Okay, the operational strength seems undeniable then. How much of this, based on what we've read, is tied specifically to their AI platform? AIP, that seems to be the buzzword.
It really is. AIP comes up constantly as a
Yeah.
core driver. It's described as like an orchestration tool. It lets companies blend these new large language models with Palantir's existing platforms, Gotham for government, Foundry for commercial data integration.
Right, makes sense.
And management's language was strong. They called demand explosive. It's not just them saying it either. We saw one source mention Forrester Research ranked Palantir as a leader in AML platforms.
Okay, so third-party validation too.
Exactly. And that, plus landing big deals like a $30 million contract with ICE working on NATO AI systems, it suggests the tech, especially AIP, is hitting the mark.
Yeah.
Across lots of different industries, too. Hospitals, pipelines, insurers, telcos.
Yeah.
They were all mentioned.
Okay, so that paints the growth picture, the reason why the stock has run up so much.
Yeah.
But here's the other shoe dropping, right? Where the sources start flashing warning signs. The valuation, words like stratospheric, nosebleed levels. What numbers did they actually give?
Yeah, this is the big counterpoint. The numbers are pretty stark. The price-to-sales ratio, the PS, it's cited between 96 and about 101.5 times sales.
101 times sales.
Right. And just for, context, the S&P 500 average is like 2.8 right now.
Oh, big difference.
Huge. One source put it really sharply. They said Palantir would still be seen as expensive even if its PS ratio was just 24, which is like a quarter of where it is now.
And to get to that PS of 24.
You'd need revenue to basically quadruple from today's levels just to justify that lower, still arguably expensive valuation.
Wow, okay. And what about earnings? The PE ratio.
Also sky high, cited at 265 times adjusted earnings. Now, earnings are forecast to grow fast, maybe 41% this year, and Palantir does tend to beat forecasts. But still, 265 times earnings, that sets an incredibly high bar. You need almost flawless execution just to keep that multiple, let alone grow into it.
It feels like it's priced for beyond perfection, which leads to the big question the sources raised, is this sustainable? I saw something about a historical look.
Yes, that was fascinating. One analysis looked back 20 years at software stocks. They found only 6 others that hit a PS ratio over 100.
Only 6, okay. And what happened to them?
Well, the outcome wasn't great. All 6 eventually saw huge drops, at least 70% down from their peak. The average decline for those 6 stocks, 81%.
81%. So if you apply that historical average.
Right. If Palantir followed that historical pattern, applying that average 81% drop from its recent peak, well, it suggests a potential downside to a much lower share price. It's a sobering historical comparison presented in the material.
Definitely gives you pause. But, like you said, there's a debate. Not everyone agrees it's doomed, right? Some analysts are still really bullish.
That's right. The sources show that split clearly. You've got analysts like Dan Ives at Wedbush calling it one of the top technology stocks, sticking with a, $140 price target?
High target.
Very. And Morningstar suggested it could be the next software juggernaut. But then you have other analysts sitting at hold, pointing directly at the valuation. The average target price we saw cited was way lower, around $93.89.
Suggesting it's already priced in.
Exactly. That the good news, the growth, it's already reflected, maybe even over-reflected in the current price. It really highlights the tension in the market right now.
So let's try and synthesize this. We've got, from the sources, this picture of really strong business momentum. AI demand is high, U.S. commercial is booming, the tech seems unique. But then there's this just undeniable overhang of an extremely high valuation. What are the key takeaways balancing those two sides?
Well, the strengths are clear from the reports. That accelerating growth, the AIP demand, improving financials, big contract wins, powerful stuff. But the risks are just as clear in the analysis. The valuation requires basically almost perfect execution.
No room for error.
Pretty much. There's the risk of a sharp pullback if they miss a step, or if market sentiment just shifts away from these super high growth names. You always have broader economic risks, and maybe down the line, competition, though that wasn't the main focus. Oh, and one source did flag a possible slowdown in international commercial growth as something to keep an eye on, even though the U.S. is so strong.
Okay, so pulling it all together, what does this mean for you, the listener, trying to make sense of all this information?
Based on what we've reviewed, the business itself looks really well positioned. It's in a hot market, AI, and seems to be executing very well operationally. However, the analyses strongly suggest the current stock price, around 100 times sales, over 260 times earnings, is already factoring in years of future success, maybe assuming perfection. So while some analysts see more upside, that historical data point about other stocks hitting 100x PS offers a pretty strong warning about how sustainable that is. The implication from the more cautious sources is promising company, yes, but the current price tag carries, well, significant risk according to their numbers. Waiting for a better entry point, maybe a dip is suggested. Though, patience might be tough with all the hype.
It really is fascinating, isn't it? A company firing on all cylinders operationally, getting rave reviews for its tech, yet facing this intense scrutiny and, frankly, some stark historical warnings about its stock price. And that contrast is just
Right.
really sharp.
It really is. And it leaves you, the listener, with a critical question coming out of this deep dive. Looking at the history of similar software stocks hitting these kinds of valuations, do you see enough in Palantir's story, its tech, its market, its potential, based on these sources, to believe it's truly different this time? That it can defy that historical pattern?
Or is history a potent guide here, suggesting that, at some point, a significant price correction might be more likely than not? It's that classic tension, isn't it? Balancing that exciting growth story against valuation discipline. Something to really chew on.